before the closing bell rings. You know, it's easy to be sluggish on a Monday, but today, not even. It's all about energy. Many forms of it, right? Our energy plus the sector itself. It's today's top gainer on the S&P, and today's closer has some names. He says will keep your portfolio pumping green. We're joined by IHT Wealth Management's Steve Dudash. Okay, Steve, why do you like energy when we've watched oil get jerked around all over the place? There's too much supply if you listen to the naysayers.
I like yield, I like dividends, and I like companies that I think are undervalued. And I think that whole sector has been left in the dust the last year or two, and so we're going to take advantage of. I'm buying into the U.S. economy. I'm buying into the fact that tariff war is more show than real bite, even though I know we can all give examples of people who are getting hurt along the lines. They're going to work this out. And when they do, you'll see the bump. And I'm buying into the fact that our government is basically, the Fed, has basically said we're going to prop up our economy no matter what it takes. And usually when you don't see a recession and you see a Fed pump money in, you're going to get good returns. So buy into the dividend yielder ones in the sector that's going to be best positioned for ultra-low rates for the foreseeable future.
Okay, you're not worried about what we see as supply spilling over at the Cushing storage facilities at Oklahoma. Fine, let me just take that and say this
though.
Okay, but the yields you really like, and that must outweigh your play. You like BP, Valero, Marathon. What are the yields on those three? Just run through them quickly.
4 or 5 range over and over again. And yes, I'm worried about the supply, but that's why you're seeing the prices on that whole sector. Forward PE ratios are in the 4s and 5s. I mean, you're buying these things cheaper than you're buying Coke. You're buying it cheaper than you're buying Walgreens. I think you guys were just talking about it. You're able to get cheap prices and a higher yield. And in the meantime, your viewers have portfolios with bonds in it that are yielding 1-2% right now. You can turn around and buy into a stock sector, get 4 or 5%, and I think mitigate a lot of the long-term risks that you're going to see in the bond market in the next couple of years. Because I know you were saying, yes, we're out of the inverted yield curve. You know as well as I do, 2 days from now, it could be back on the front pages.
Indeed. That is very good advice. Steve Dudash, it's great to have you. Thank you so much. It is a big rally and a big close here. The Dow up 250. Gold, it's no longer a fear trade. It's down below 1,500 an ounce.